Hey guys, what's going on? My name's Tom Spark. Welcome back to another video. So guys, I haven't been posting too much lately. I was kind of posting some on TikTok and some shorts as well, but I kind of decided to just go back to this long form content since TikTok has now officially become a surveillance apparatus. That said, I thought I'd make a video because something pretty big has happened. My recessionist model went up 8 points. This is the biggest amount of points it's gone up since I pretty much created the model back in December, where I started predicting kind of more on purpose that a recession is going to happen, or being more aggressive, at least calling that that's going to happen. Now, when I started calling for a recession in November, I got a lot of hate. I got people even emailing me telling me, you don't know what you're talking about. A recession is not going to happen. And primarily, the difficulty with predicting a recession is because a lot of insider trading is going on. But it's not as simple as that. A lot of stuff happens behind the scenes that the everyday person like you and me can't even access, even with my recessionist model. But that's kind of why I tried to bake in some of my own opinions and my own gut feelings into the model to combine it with real data. And that's why I think my model is pretty good. It's at recessionistpro.com. If you're interested, it's around $10 a month. You get access to tons of things, forecasts, dashboards, various different ideas. Right now, if you were to perfectly follow my model, let's say you invested in NVIDIA, you might be down like 20%. But if you followed my model, you're actually beating the S&P 500, which I think if we're beating one of the biggest indexes out there, that's pretty impressive for being only a couple months old. It might not look that exciting, but some people, like I said, down 20 to 30%. Maybe you invested in gold last week, it's down 20%. So I think it's doing pretty good. It's more conservative. We're not trying to beat the markets right now. We're just trying to conserve capital and wait for the recession and jump back in. So if we're beating S&P 500 at the same time, I think that is pretty impressive. So guys, why is there a huge shift in the model? Well, a lot of things, if you look at my indicators right here, a lot of these indicators haven't actually changed too much. The yield curve is mostly the same. We're still waiting on the yield curve and the average hours worked to go to the other side to be worsened. Those are really like the last indicators that would flip to confirm a recession. So if all those get confirmed, that pretty much means we're in a recession. The volatility index has been going up lately. People are a little bit more scared. Outside of that, like really not much has changed. They're not lowering interest rates, which means they think jobs are okay and they think the economy is doing fine. But like I said in the beginning of the video, I think a lot of the things happening with the economy aren't really public knowledge. They're not like public numbers that you can really evaluate. And that's kind of why my model is starting to go up lately, because it has a lot of those kind of things baked into it, like political indicators. So one thing is that Trump's going to replace Fed Chair Powell with some guy called Warsh or something like that. And this guy, I've been reading headlines like saying like, hey, the markets feel pretty good about this guy. He kind of hates inflation. But it's like, bro, this guy and Trump are going to be buddies. He's going to come in, do whatever Trump wants to say. Maybe in the first month, he's not just going to take interest rates, but it's definitely going to be the case that the Fed is no longer independent. And when you're looking at recessions, I think some of the most important part is not looking necessarily at individual kind of qualifiers, but we could kind of look at like the broad economic stuff and kind of like the underpinning of what's going on behind the scenes. So lots of times when recessions happen, before recession happens, gold starts going crazy. Gold and silver start going up a lot. And then when the recession actually happens, starts going down. Look what's happening right now. Gold and silver are plummeting. I think it's because the insider trading, the market makers kind of know these signals. They kind of react in these certain ways. And it's kind of like the calm before the storm. And the storm is kind of starting to brew right now. That's kind of what my model is kind of seeing right now. I've also seen some articles from Claudia Sam, who made the SAM indicator, which is basically an indicator that looks at like changes in unemployment data. And it's been pretty much 100% correct since like the 1960s. It was kind of incorrect during COVID. It's kind of been a hard indicator to track lately because the United States is kicking out so much of its workforce, and that's kind of skewing numbers as well. But I saw that Claudia Sam said something just doesn't quite feel right, and I would agree with her. Lots of times you can't really point to one specific thing that's going to cause a recession. It's because a lot of the market, like I keep kind of saying, is kind of corrupt. So it's like it's not going to fall before it does. If you look at the 2008 housing crisis, it looks perfect because the banks and various different organizations were kind of obfuscating the fact that bad things were happening. And I do think that could be happening right now. So that's definitely a metric. If we're looking at jobs data, who knows? Maybe the jobs data is wrong. Maybe various metrics that are giving out right now are wrong. It's not really that crazy or conspiratorial to think of it like that. To me, it seems like the market makers know something is bad. Maybe even tomorrow we're going to hear about something. But if you look at cryptocurrency right now, Bitcoin is dumping. So is Ethereum, gold and silver. All these kind of like leveraged assets are just absolutely dumping. So it means that something is around the corner. So when you're looking at markets, it's not like saying like, oh, everything looks fine. There's not one clear reason why things are going down. So I'm just going to keep investing. I think you need to kind of look at a lot of these different signals and kind of sometimes get that gut feeling. That's kind of what I tried to put in my model, like I said. And right now it's going crazy. It's just something is going wrong. It's not exactly pinpointing what. It just, the other day it said the volatility went up and stuff like that. I think one of the problems with my website right now, anyways, to be transparent with you guys, is that something in the code is, so let's say it goes from 52 to 60, right? Something in the code after it goes from 60 to 60 the next day, it kind of wipes what the model is showing. It doesn't wipe the data. It just kind of wipes the presentation of why that changed. So let me see if I can fix that really quick, just to kind of show you guys exactly why the model changed from 52 to 60. So I looked into it, and the bug is, I'm fixing the bug right now, so it should activate display it. But the reason it went from 52 to 60 specifically is because inflation went up slightly. That's not necessarily good right now. And that's one reason, like I was saying, inflation or the rates didn't lower, because inflation went up a little bit. And you don't really want to lower rates when inflation is going up slightly. And part of that probably is due to Trump's tariffs. Of course, they're always going crazy with these tariffs and stuff like that. I still see people talking about it today, trying to buy something, and the person says, oh, yep, tariffs, this is why we have to increase the prices. Not only that, but there's also a slight real estate divergence, which basically means that the housing market kind of went down a little bit when stocks are still going up, which is not necessarily a good sign for the economy overall. So that would explain that huge jump, because those are things that our model tracks very strongly. Inflation is, of course, as you probably know, is a huge indicator. If it's going up, that's not necessarily good for the economy. It could put us in a tricky spot. If inflation keeps going up, they can't really lower interest rates. The economy starts suffering more and more. People start spending less. It just kind of puts us into this issue that we've been in for the last couple of years. And so it's kind of like the political machine in the United States right now doesn't really understand how economics works. If you're thinking about it this way, how can we make the economy better? Well, we want interest rates to be low in order for there to be money for people to spend, right? Businesses will make more money and stuff like that. But if that was the case, why is Trump putting so much emphasis on tariffs? Why would they be trying to artificially increase the prices of goods? They know that tariffs does this, so why are they doing this? The only answer really could be is that they specifically want the economy to blow up. Maybe if you want to get political, maybe Trump's a Russian asset trying to destroy the United States. That honestly makes the most sense. Or if you really want to be pessimistic, they're all just fucking retarded and they don't know what they're doing, and they're going to destroy the economy because they are clueless, which might be more likely. Anyways, guys, thanks for checking out this rant. Let me know if you like it down in the comments down below. Like, comment, subscribe. This channel is really hard to get growing because all those other people on YouTube who are making shitty predictions all the time, making clickbait videos. One day they're calling for a recession, next they're saying the bull market's back. They get all the views. If you like it real talk, stay tuned here, and I'll see you again very soon.